The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box. I'm Karen Cho with Steve Sedgwick. These are your headlines. Asian stocks gain after Wall Street kicks off the week largely on the front foot, with the dollar pausing after hitting multi-month highs. President-elect Trump taps Fox News contributor Sean Duffy to head up the transportation department as the field of Treasury contenders reportedly widens amid transition team infighting.
The US Justice Department is reportedly ready to force Google to sell off its Chrome browser, potentially the latest regulatory push to break up the tech giant's online search monopoly. Elsewhere, Oaktree Capital Management's Howard Marks strikes a bullish note on China, telling this channel exclusively he remains optimistic on the country's long-term possibilities as he predicts rosier trade relations with the US.
If we can find a way to agree on the terms, I think the relationship will be better in the next decade than it was in the last.
And we're going to hear from Hong Kong's Financial Secretary, Paul Chan. That is live from the HKMA's Global Financial Leaders Investment Summit at 6:30 GMT. What is the biggest... Good morning, how are you?
Good morning, very well, thank you.
Good. We've made it to Tuesday. Hurrah. What is the
Monday.
biggest bear... I did Pilates last night. Oh, my goodness.
Well done.
I wasn't completely incompetent, which is amazing, which is my third time, and I wasn't...
You managed a downward-facing dog and a cobra.
No. You can always just look at the instructors, smile and laugh as I try and do stuff, and it was less so last night.
Yes.
Anyway, the other barometer, rather than my incompetence physically, is what is a barometer of when we're going into a bear market? Is it A, when the Daily Mail starts telling you we're in a bull market? B, when the taxi driver tells you should buy this stock? Or 3, when some of the biggest
Bitcoin.
bears in the market turn bullish? And I say this because the likes of some of the biggest investment banks out there are getting quite excited about the market, bearing in mind we're virtually at the top.
And we had a call to buy the FTSE yesterday as well. Do we just bundle that up there as well? I mean, where the FTSE is going nowhere fast. We've seen that over a number of years. So, is that the sign? But I think, what are we talking about? 5% upside, 10% upside from here? Some are suggesting 10%. To me, when we talk about all the factors, there is definitely a feel-good factor around the Trump administration, what that could unlock in terms of animal spirits, but still balance that against some of the short-term risk. And to me, what's fascinating just in the past 24 hours, this exit from the Biden administration, that could prove rocky for stocks. We've got the defense side around Ukraine, the use of weapons supplied by allies to fire into Russia.
Yeah.
That story that could ratchet up geopolitical risk. The other side has been around big tech. We were just talking the other day about whether the regulation would touch the sides. We think it's in the rearview mirror now because we've got a new administration. But on the way out, the Biden administration, Lena Khan, suggesting that they may still go after some of these antitrust cases that we have to finish off.
The antitrust case wasn't a Biden administration initiative. It was a Trump administration initiative. And I find that fascinating as well. So it's gone from Trump to Biden to Trump again. So we'll see what happens there with that DOJ prosecution and whether the judge... We'll talk about this later on the show, but I think it's fascinating. No, the reason why I mentioned the latter when I got digressed into all kinds of areas about Daily Mail and what have you, is because Morgan Stanley... Now, we know that Mike Wilson threw in the towel of being a bear earlier this year, but now Morgan Stanley says it sees the S&P 500 hitting 6,500 points next year. These were the bears. This on the back of lower Fed rates coupled with a more business-friendly White House. That's about 10% from where we are today. Now, in a note, it's a long note, I've got it in my inbox, 85 pages. Morgan Stanley's Mike Wilson, once one of Wall Street's most prominent bears, said the election of Donald Trump could lead to a, quote, rise in corporate animal spirits, as opposed to the last couple of years. Just saying. And catalyze a more balanced earnings profile across the market. However, Wilson also warned that significant import tariffs and cutbacks in government spending would lead to weaker than expected growth. There's a lot in that report. We can go through it in a little bit more detail a little bit later on. But in the meantime, the markets, Karen.
Let's just take stock of where we are when it comes to the S&P 500. We're still about 2% off the record highs, so there's still a little bit of room between where we are trading now versus some of the peaks we've seen in recent weeks and months. And if you look at that trade on the markets yesterday, it was a split picture, wasn't it? The Dow in reverse, a modest upbeat trade for the S&P 500, decent gains unlocked there for the Nasdaq tracking higher. And the big movers, well, it's still that Tesla trade, so we're still in the wash up from the election. Tesla out in front as Elon Musk plays a role in the administration and future. Nvidia seems to be holding some of those tech fortunes back as we waited out for earnings this week. So it does feel like somewhat of a treading water pattern that we're now seeing on markets. In terms of sectors, well, energy was in the mix. It was up about 1% to some of the geopolitical risk, really firing up energy, but also some of the trader action as well. Let me take you to the Treasury side and what we're seeing on those yields. We are reversing today, so we're pulling back. We've seen a little bit of movement to the upside in recent trades after the election, and the 10-year this morning, though, flipping lower. 4.40% is what we're watching. To the dollar trade, as we see the consequences for foreign exchange on the back of that reversal in yields, we're still seeing some weakness now in euro versus the dollar. So euro's on the back foot, down 0.1%, 105.86. Sterling slipping as well. A dollar a little bit weaker versus the Japanese yen, though. That is notable. You're seeing a slide of about 0.1% plus. 154.41 roughly the handle. Dollar is gaining again versus the Swissy. So mostly still a firmer dollar story, even with some weakness in yield, Steve.
Karen, while I was whittering on about my lack of flexibility, there is a lack of flexibility in European corporates, which is worrying for those who, some of the biggest names, ThyssenKrupp, Nestle. Let's start off on Nestle as well. You got a newish CEO. Let's go through this. Mark Schneider quit in August. The new CEO, Frexer, started in September. There's a lot of people thinking about why this man doesn't kitchen sink, because let's face it, Nestle's got a multitude of problems, not least that it's being outpaced on the sales growth by the likes of Unilever, which is pretty much unheard of a couple of years ago. By the way, talking of Unilever, we got this ex-CEO, Paul Polman, on later in the show. I should say that. But look at the 5-year chart on Nestle. It's been a horrible own. Really horrible own since that peak of around about 127 Swissy. They're now around about 78 Swissy. Year to date, they're down 20%. So it's been a horrible own, but they've just had a plethora, a cacophony of updates today. So let me go through this as well, and we'll work out whether it's going to find some line in the sand or not. Confirms 2024 guidance, organic sales growth around 2%. Well, let me just stop you right there. Organic sales growth around 2% is not good enough for this company. Historically, and I've been looking at these guys and the rest of the sector for a long, long time, they want 4% as the mean, not as the aspiration, as the mean. They really want 5, 6, 7, but 4% will do it. 2% is very underwhelming as well, but if they can hold the line and then build from that, maybe that's more exciting. Underlying trading operating profit margin around 17%. In the medium term, organic growth is expected to be, and this, I didn't even see this one, so you get my point. In the medium term, organic growth is expected to be 4% plus a normal operating environment. So again, as I say, they want 4%, they're getting 2%, the aspiration is there. Cost savings, this is where they're making some interesting moves. At least 2.5 billion Swissy above existing initiatives by the end of 2027. I'm trying to find something else that you can cling on to here, because I know there's a lot of you beleaguered holders out there. Expects organic sales growth compared with 2024, underlying operating profit margin anticipated to be moderately lower than 2024 guidance. And that was what was expected by many people in the market, that this company would temper expectations because you've got a new CEO. If you can't do it when you're a new CEO, and you lot know that, you're all in the C-suite out there, then you can never do it. So moderately lower operating profit margin anticipated than 2024. Karen Cho.
We've got to talk about water, don't we? And there's a line here from the business as they talk about waters and premium beverages to become standalone business. There were some issues earlier this year, the contamination of some of the water products. There's also been consolidation around them, which is, I think it's interesting because we've been talking about the snack foods business that's been consolidating overseas and in the marketplace. Is water the area of consolidation now? And you saw recently Primo Water, which was an affiliate of Blue Triton Brands, merging to create a diversified water giant. So as you see moving pieces around you, typically this can provoke some action when people think about their portfolio of companies. And I think at this stage, as we talk about a standalone business, does that unlock a premium in the business for some of those shareholders?
They're always rejigging the portfolio. As I've told viewers before, my first portfolio rejig was when I went down the road here, actually, the meeting. 1999, I think it was. Neil Fitzgerald, who was the boss of Unilever at the time, the Path to Growth strategy. I remember it. They were going down to 400 key brands. They're always rejigging. The point is, fine, rejig as much as you like, but you've got to hit your 4%, and you've got to have your profit margin as well. And they've not been doing that, but I hear what you're saying. People keep changing their minds on water. Another company that you kind of want to see rally if we're going to see European corporates do better, and you've gone ahead of me. Look at that. There you go. 1 year chart on Thyssen down 49%. The year to date down 46%. I mean, it's woeful. They were 11 euros back in 2021. They've now fallen to 3.4. So you do your math. I'm afraid the news isn't perfect again. ThyssenKrupp said it's going to take a fresh €1 billion impairment on its, yeah, you guessed it, it's the steel division again, citing the sector's deteriorating outlook as well as future investments needed to decarbonise production. Is there a nod to the government there? Oh yeah, we haven't got a government, have we? Well, kind of, but the impairment is on steel is the second as many years, comes as the Czech billionaire Daniel Kretinsky, who already owns 20% of the division, continue to, over the question of whether his state's going to go up higher. Again, they're struggling, aren't they? And whether there's going to be a partnership with the government to get this economy back on track remains to be seen.
They've been arguing for tariffs. That's been the message from the steel industry for a long time. But even more recently saying, look, cost of production doesn't meet the sale price. They're looking for some sort of tariff to stop the flood of Chinese exports coming to this market. And you've got to say, if the Trump administration gets even more active on steel again, does that disrupt the steady supply of steel coming from other parts of the world into Europe, making it even more difficult for European producers?
As ever. Because there's people thinking out there, OK, China's not selling domestically because they've got weak demand. China can't sell to the US potentially because the tariffs are going to go haywire over there. Oh, they'll sell to Europe.
Yeah, what's the big open market waiting for the product? It's Europe.
And yet we hear about the more muscular European foreign strategy and what have you. Let's just see how that one pans out. Anyway, we're going to hear from a string of major US retailers over the next week. I don't know how that one follows what we just said. But anyway, over the next week, as investors look for signals on consumer strength and guidance for the all-important holiday period. The biggest name in the sector, Walmart, is first up today with analysts forecasting EPS and revenue growth of around 4% on the year. Also get an insight into the US housing market and demand for big ticket items with home improvement to retailer Lowe's. Revenue there is seen falling just over 2% on the year, with earnings expected to slide more. Well, we shouldn't have favourites, Karen, but we do. And Neela Richardson is one of them, of course, chief economist at ADP. Oh, we would love to see, I think you're in München of all places, Neela, but look, we'd love to have seen you around the desk. I have so many questions for you. Let's start off with the really basic one. What on earth's going on in the US jobs picture? It looks stunningly robust still.
Good morning. So great to be with you. And yes, the US labor market is quite strong, especially when you look at ADP data for the month of October. We saw basically a malaise in hiring over the summer. That's picked up in the last 2 months. It's a little bit of a disagreement with the government numbers, which saw some weakness in October. But overall, if you put all the picture together, what you're seeing is still firm hiring across firm sizes and on almost every sector except manufacturing, where there's still some weakness.
Neela, there is a view from economists, though, that we're looking at some sort of fading growth picture now from here as some of that fiscal stimulus starts to wane. Does that have implications for the job market into 2025?
Yeah, I think you're going to see some slowdown. I mean, we can't keep posting plus 200,000 jobs per month. I think those days are quickly numbered. But what you'll see is more sustainable hiring. In the last 2 years, a lot of what firms were doing were just replacing people who were walking out the door because of better jobs prospects. Well, those prospects have dried up. It's actually harder, taking longer, especially for young graduates to find jobs in this economy. And what that's going to translate over into next year is that hiring is only for growth, not for replacement, and it's much more strategic going into 2025 than it has been in the previous years.
Neela, you might be one of the few people who can answer the following question. I know a lot of people are hedging their bets at the moment as well, but let me ask the question anyway. What does the incoming Trump administration mean for jobs?
Well, it's a long game. And so we will be answering how policies translate into hiring over the course of the next 2 to 3 years. But we're at such early stages, it's going to be hard to tell. One thing that companies like is certainty. And so if there is a lot of transparency in the policies, if there's forewarning in the policies, if there are detailed implementation strategies, that's going to be good in terms of providing the backdrop for strong fundamentals. If there's uncertainty, and this is true of any administration, it's going to be harder for firms to hire. And we saw that even with monetary policy. Once we got certainty on the direction of the Fed, in our view, it unlocked some latent hiring in the United States that we saw over the summer, unlocked it as soon as we saw that September rate cut. I would translate the same into fiscal policy. The certainty is important for clarity for U.S. business.
Neela, let me try and bridge those comments together from what we've already been hearing from commentators. We don't know what sort of tariff regime we're setting up for, if it's the sort of promises that Trump was making on the campaign trail versus when he's in the White House. If we do have tariffs like we saw in the previous Trump administration, is that good or bad for domestic jobs?
It's going to be hard to tell. And I don't mean to be wishy-washy on your answer. You two are my favorites too. So I want to give you the straight as I see it, but it's going to be really hard to tell because as we look at the headline policy, even in the first Trump administration, there was a product opt-out list. Those exclusions from the policy is as important as the policy itself. And those exclusions maintain to products, they reference countries, they reference companies. And so until we get a holistic, detailed picture of what these tariffs will be and how they're implemented, it's going to be really hard to see how they're translated into Main Street hiring.
Neela, there's a lot of data that is missing about what the migrant population or the illegal migrant population, what it does for the US economy, what it does for US productivity. And I've seen a lot of people trying to work out what could happen if there are large amounts of migrants who are sent back down through the borders of America as well. Do you have any data on what that could do to productivity, what it could do to a lot of American companies who employ migrant labor that may or may not have the right permits to work in the US?
What we've seen over the last 2 years, and this is coming from official data from the US government, is that immigration has played a big role in the U.S. labor market in terms of increasing supply. We were coming out of the time of labor shortages. And so seeing the pickup has boosted labor supply. It's made it easier for companies to hire. It's reduced the runaway wage increases that could trigger inflation. And so wages are more stable. Now, going forward, immigration has always been a part of the U.S. labor market, especially in key sectors like construction. 30% of construction workers come from somewhere else. They are not citizens of the country and usually from South America. So if you're looking at housing and housing as a big input into inflation, having a robust system for migrant work, for immigration is going to be important for this very large U.S. economy.
Neela, let me ask you about the UK because we are seeing changes around government policy, including national insurance contributions. There are concerns about what this could mean as employers face more costs from the Chancellor's budget, and there could be casualties on the high street in particular. What's your view of just how the UK is looking when it comes to the labour market?
Well, it's certainly slowing. Let me step back. Globally, in UK and other places, what we're seeing is the healthiest labor markets we've seen even before the pandemic. When you look at the unemployment rate, when you look at the number of people employed. So there is some good general news about global labor markets. But when you look at specifically at the UK over the near term, you've seen that vacancies have gone up a little bit, wage growth is going down a little bit, and unemployment rates are creeping up. Overall, if the economy continues to maintain that 1.8% growth rate, maybe 1% growth rate to 1.5% that we're seeing in the UK next year, you're going to get a slowdown in hiring, and that slowdown is a tricky place to be when you match it with the UK's lower productivity per worker. So going back to your original questions, investment in productivity is going to be key. And if employers are restricted for that because of higher taxes or labor costs, it's going to be a challenge to get more productivity investments into the front door that leads to hiring, that leads to better and faster and more efficient output that triggers growth. So the productivity investment is the key in 2025. It can make a big difference even as you're facing higher labor costs.
Great explanation, Neela. We've been looking for productivity for a long while in the UK. Thank you so much for joining us. Enjoy Munich. It's beautiful this time of year. Neela Richardson with us, Chief Economist, ADP.
Right, coming up on the show, the UK Prime Minister Sir Keir Starmer meets the Chinese President Xi Jinping on the sidelines of the G20 summit in Brazil, with both leaders stressing the need for cooperation. Plus, we're going to cross over to Hong Kong, where Emily Tan is at the Hong Kong Monetary Authority's Global Financial Leaders Summit. We're going to bring you a live interview with the city's Financial Secretary, Paul Chan, later in the show. And we'll begin to look ahead to the new year, blimey, when we're joined by the editor of The Economist, The World Ahead 2025. That conversation at 6:45 GMT.
President-elect Donald Trump has named former Wisconsin Congressman and Fox Business host Sean Duffy as his pick for Transport Secretary. He's the second former Fox host tapped to serve in the incoming administration, alongside Pete Hegseth, who Trump wants as his defense chief. Donald Trump is reportedly widening the search for his next Treasury Secretary, with Apollo CEO Mark Rowan and former Fed Governor Kevin Warsh reportedly in the running. This after billionaire investor and lead contender John Paulson ruled himself out last week. Investor Scott Bessent and banker Howard Lutnick are also believed to be in the running. The US Justice Department will reportedly ask a federal judge to force Google to sell off its Chrome browser. That's according to Bloomberg, which says the DOJ will ask the judge to impose strict measures on AI and Google's Android platform. Judge Amit Mehta has found in August that Google had illegally monopolized the online search market. If he accepts the DOJ proposals, he would impose one of the biggest crackdowns on big tech
Something
ever.
joyous just happened for the viewers. My mic went, and so I've just been spending the last couple of minutes. I'm desperate to get in all this stories.
He got muted. He got muted for a good minute and a half.
I think the viewers have got to the technical department and finally shut me up. But they didn't last for long because we had a spare for once.
Actually, I can't hear anything either, so we could go long in this segment.
Let's go just along with the show. French farmers have escalated protests. It's a big one in London today as well. Let's come to that. French farmers have escalated protests against the trade agreement between European Union and South America, the so-called Mercosur, which they claim is creating unfair competition. Protesters went to the streets nationwide with disruptions to traffic in northern France as well as Strasbourg. The EU-Mercosur deal, which was initially agreed in 2019, has faced opposition from a number of European countries. Now, UK farmers, if you are in central London today, you just got to take it on the chin because the farmers are coming to town. They're set to protest in London today over the government's inheritance tax proposals. Under the new plans, first unveiled in the UK Chancellor's budget, the government will impose inheritance tax of 20% on farms worth more than £1 million. Environment Secretary Steve Reed said around 500 of the country's 209,000 farms will be affected. That's what he says. But the UK's National Farmers Union says the government numbers are misleading and around 2/3 of farms will be impacted.
How was your drive in this morning? Did you see any tractors on the road?
No, not at 4 a.m. or 3 a.m. But I expect to see a lot coming from my neck of the woods as well. They are incandescent of what all these changes in the budget mean for them. And I heard a brilliant podcast. It was on, or an interview with a farmer on the Times radio as I was driving out. And this farmer says, we've been asked to do so many things. We've been asked to embrace Brexit, where we've lost a lot of the funds from the EU. We've been asked to embrace climate change and just changing the way we farm and changing the products we offer and the set-aside, etc., etc. We've done a lot of that Exactly. We've done all of that on our own back, and it's cost us as well. And we've done it as a contract with various governments now. And we just feel that one thing after another, we're getting hit by various governments of different stripes as well. So they've just had enough, the farmers. And everyone said, oh, the farmers are rich, the farmers are rich. Look at the land values. And he made a really brilliant point, which I hadn't thought of. He said, yeah, on paper, our land values have gone up aggressively. He said, that's only because, by the way, we can't use that. That's stock, that's not flow. Only because private equity and other huge investors have started buying vast amounts of land so that they can try and avoid some of the rules affecting their assets from other parts of the economy as well. So land values may have gone up aggressively, but they can't do anything with that. That's not going to happen. And such a large percentage of farmers are on such a small amount of money.
We all know that paper assets don't mean anything unless you sell them.
Unless you can sell them.
And if you never intend
And if you sell them, then you don't farm, because it could be a housing estate, it could be an industrial estate, but it ain't going to be a farm if the farmers keep on selling. Average age of farmers in the UK, it's going up like elsewhere because people just don't want to get into the business.
And there goes UK food security. Let's talk about what the Prime Minister is up to. UK Prime Minister Keir Starmer met with Chinese President Xi Jinping on the sidelines of the G20 summit in Rio. The two discussed human rights as well as Chinese sanctions against British MPs. Xi and Starmer also agreed to broaden their cooperation and dialogue. First big conversation in 6 years between Prime Minister and the Chinese leader.
So, okay, let's role play this one. Keir Starmer doesn't want to upset Donald Trump. Keir Starmer doesn't want to upset Xi Jinping. Keir Starmer doesn't want to upset Germany and Ursula von der Leyen.
Europeans, yes.
You can't have everything in the geopolitical chess game. If Trump, and the mood music out of the Trump administration has been, if we need you to be harder on China in order to avoid tariffs from the United States, what are you going to do, United Kingdom? That's a tricky one. I don't know the answer. But if we need you to be further away from the EU so we can be more aggressive on them, but we want you as an ally, what are you going to do, Keir Starmer? So it's a very tricky one. He may talk a beautiful book about being really friendly with the Americans, with the Europeans and the Chinese as well. But there's going to come a time when he's probably going to have to choose on some of these where his priorities are.
But a dialogue helps, doesn't it? Because the Europeans are in the same boat. They don't know whether they're looking at tariffs, whether they're going to be at loggerheads with the US administration, whether it's going to be friendly, where you're still looking at a very strong ally relationship. And of course, that goes to where the UK also sits, whether it's going to be selling more into Europe, whether Europe's going to be on the back foot, whether it's also facing tariffs. I think having a dialogue certainly helps at this stage. In the meantime, the UK Prime Minister also confirmed plans for Chancellor Rachel Reeves to hold talks with her Chinese counterparts on economic and financial ties. Starmer said he wanted to improve the UK's overall relationship with China.
We want our relations to be consistent, durable, respectful, as we have agreed, avoid surprises where possible, and strengthened dialogue should provide stronger understanding. The UK will be a predictable, consistent sovereign actor committed to the rule of law and multilateral system.
UK Prime Minister refused to rule out allowing Ukraine to use UK-supplied missiles to strike inside of Russia after the US reportedly made its own policy adjustment. The issue of support for Ukraine has hung over the G20 with a joint communique by leaders signalling weaker support for Kyiv as it marks 1,000. What's the point of a G20 communique on Ukraine? Not being funny, guys. The Russians are in there, the Chinese are in there. There's a whole load of nations who don't necessarily support the Western stance. You're not going to get a joint stance on this one, are you? Anyway, watered down last year's criticism was that intense anyway, but they've watered it down regarding the Russian invasion.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Gumete, weekdays on CNBC.